Hello everybody, welcome back to the Bullion Capitals course and complete course on trading. So in this chapter, we'll look into the top 10 chart patterns. Yes, so we already have seen hidden secrets to identifying SR. We have completed level 1, we moved to level 2, and now we are in the second chapter of level 2, that is top 10 chart patterns. We'll exactly see what are those patterns on which the technical analysis and trading depends. So let's understand by looking into what a chart pattern is. So please pay attention to this. A chart pattern is a pattern within a chart. Now, when the prices are graphed, as in when the market keeps going and the prices are plotted, that is your open, close, low, and high. These are kind of graphed. So if you've seen your trading window or at least any particular chart of a company or a stock, you can see that there are these candle formations that have kind of formed because of several prices which goes up and down. Now when these candlestick graphs are made, when it is graphed the prices, it forms certain patterns. Now we'll look into what these chart patterns really mean, because they can help you in a profit or a loss depending on what message it gives based on the technical analysis. So moving ahead, if you can see in the stock or a commodity, chart pattern studies play a large role during technical analysis. So as I said, this will basically be the base to your future trading and your calls on particular stock. So when the data is plotted there, there's usually a pattern, and it naturally occurs and repeats. What I like to call is homecoming, because when you see a certain pattern, it is definitely and it's for sure that it will naturally occur and repeat after a certain period of time. So let's look into the chart patterns. The first we have here is the double top. Now please understand, double top is something that we can see here. First thing is that we can see a peak. This is the first peak, that is a high that is formed, and this usually happens, double top usually happens in an uptrend. Now let's see here, it's going up, there is a first peak or the first high, and then it goes down. So once it goes down, you can see there is a low that is formed. Now please understand that we call this as a neckline, and neckline is something like you can say a temporary support on which the entire um, chart pattern will be based on, right? So if you can see, there is a high that saw a rejection or that fell down. It did not break the neckline, but it bounced back up, formed another high which is almost equivalent to the previous high, and then it went down. Please note that the trade is usually placed once it hits the neckline, and then it gives a retracement. So you can see green or bullish candle, and then it falls down, right? So you place the trade here. Now you can see there are two tops that are formed, and there's one neckline. So that's very simple. That's why we call it as double top. Now I will show you by the end, after we look into all these different chart patterns, I will show you on the graph a few of these chart patterns that I have noted down. So let's move on to the next one. The next one we have is double bottom. Now double bottom is exactly opposite to the double top. Now here we have the neckline here, and what happens here is that we will have lows formed. There will be two lows formed, and this usually happens in a downtrend. You can see there was a low formed and then moved up. It did not cross the neckline, but it faced a rejection, came down, and when it came down, it almost approximately formed a second bottom which was in sync with the previous low. So you can see, not exactly, but yes, you can see there is this line, you can say, and then it moved up. Now again, you can say that you will place your trade once there is this retracement, and then you can go ahead and place your trade. So this was about double bottom because it's forming two bottoms here. Let's look into the next one, that is head and shoulder. Now head and shoulder is very similar to how a human body is formed, right? We have two shoulders and a head. So if you can see, there are this is one shoulder, this is head, and another shoulder. Now let me help you understand. So you can see, obviously there is a neckline here as well, and this is very much similar to your double top, because you see here Now double top in, I'm sorry, not double top, double bottom. If you can see, there are two bottoms that are formed here. You need to make sure that this is an uptrend. It hits a level, comes down, it does not break the neckline, please note this, and then it shoots up. It crosses this high that was formed by the left shoulder, and it crosses and moves to a height. Again, it faces a rejection and drops down such a way that it will come down to the neckline, almost at a level to the neckline. Again, it will shoot up, come almost in line with the left shoulder, and that's where your right shoulder will be formed. So once that is done, it will come down and cross the neckline. Now, if it crosses the neckline, do not place the trade, wait for a retracement, and then go ahead and put your, make your trade. Now, something that's important to note is that this is very similar to your double bottom, right? And if you can see, you will just wait for another shoulder to form, and then you will be confirmed if your entire chart pattern is head and shoulder or it is a double bottom. So now let's move on to the next one, that is inverted head and shoulders. Okay, this is also called as head and shoulders bottom. So in this, it's very much opposite to your head and shoulders, wherein we will have in a downtrend, we will have this low that is formed. Again, it will jump, bounce back, come down here, and you can see that there is a low form which is breaking the previous low of the left shoulder. Again, it goes up, there's an uptrend, it does not break the neckline, but it comes down, forms almost a similar level. Basically, it forms a rejection or faces a support, I can say, to your previous shoulder, that is the left shoulder, and then shoots up. You have to wait for the retracement. If you can see here, there is a bearish candle, and then you place your trade. So this is how your inverted head and shoulder bottom looks like. Let's see the next one. We have the rising wedge. Now this is a bearish rising wedge. Let me tell you, this is usually seen in a downtrend. If you can see, even the example here, the image here, this is a downtrend. And what exactly happens is, this is like swings. Basically you have your low, then this is your high that is formed. This will be your higher low. It will just keep going. What happens here is the size decreases as in when we move forward, or as the prices move forward. Now you need to ensure here that once this entire swing that of highs and lows that has happened, there will be a breakout here. So once it breaks down, you will place, and yes, you might see a retracement somewhere here, and then place your trade. Please note, you will always see this in the sell side. I mean, you need to sell your stocks here, your whatever you're holding. Specifically in the rising wedge, if it is a bullish and it goes up, we will not be placing the trade. All right, so this was about the rising wedge. Moving on, we have the rising wedge. This is again bearish rising wedge. Okay, I'm sorry, this is the bullish rising wedge, falling wedge, not the rising wedge, but the falling wedge. I'm really sorry. So now what we see here is that there will be an uptrend, which we will see here in the falling wedge. Again, very similar. We have the high, we have the low. Again, you can see this is the higher low, and then it keeps on decreasing and moves forward until there is a breakout, and you will place the trade again. Now, if you can see, this is the rising trend again. So this is about the bullish wedge, bullish falling wedge, and we will see the next one, that is ascending and descending triangle. Now this one here on the left is your ascending, and this is your descending triangle. Now the difference here is that in ascending triangle, again there will be an uptrend, and you can see there will be a flat. So this is the high, all are high, almost at a same level. You can see it is not breaking the high, but it is maintaining that. However, for your lows that you can see, right, it is going upward, means there is a rising lower trend line. And what happens here is, at one point of time, when the size here, the distance between the swing lows and highs has decreased, you can see that there will be a retracement, after which we will go ahead and buy or place the trade. On the other hand, descending is exact opposite. That happens in a downtrend. You can see some consolidation here, but here you will have the low level, that is a flat one, the flat low trend line. And the other thing is high. The high will keep on decreasing. There will be higher lows, and the trend continues. There will be a descending upward trend line, as you can see. Again, in this, you will place your sell, you will trade, and then you will wait for the retracement, for which you will go ahead and sell your stocks. Please note that here your target and stop loss, I will talk about it, but your stop loss here will again be the high of this, and then trade, you'll place the target at the next line, that is the high of the candle. Moving on, we have the symmetrical triangle. Please note, symmetrical triangle can work both in terms of bearish and bullish. The main reason is it can happen in an uptrend. I'm sorry, let me just go ahead and yes. So as I said, it can happen in both uptrend and downtrend. And what we can see here is that there will be equal or symmetric highs and lows. Okay, so you have this high also decreasing, a descending high, and then ascending lower trend line, right? And then what will happen is at one point of time, here in this particular, it's an uptrend that you can see, right? It can come from a downtrend and then fall down as well. Okay, so you can see here there is a retracement, after which you will place your trade. So I will show you exactly about this symmetrical triangle. I've found an example on the chart as well. Let us understand the theory of it first. Now we have the flagpole. This is the bullish flag. I'm sorry, not the flagpole. This is the bullish flag, and here we have the flagpole, which you can see here. This usually happens in an uptrend. You can see here, and yes, this is a flagpole, and then it'll enter a consolidation. Now here you have your high, you have the low, and then you have the higher lows, and then it continues until it sees an uptrend again. Okay, so this was, I'm sorry, this is not high low, this is lower high. Okay, because it is falling again. This is a downtrend for the very same reason. Next, we'll see the next chart pattern, that is your bearish flag. Now bearish flag again is very similar, but in an opposite way. You will see this in a downtrend. Next you will see the sideways or the consolidation, wherein you'll have high, you'll have higher lows, and you'll have this low. It will keep on moving, and then you will see the downtrend again. You will place your trade again the same place here, and it's mainly for selling because it's a downtrend. So this was about all the 10 chart patterns that we'll be looking into moving further in our trading and other strategies. Let's take a look at a real chart. I've taken example of bank nifty here, and okay, so great, I have one here that is ascending triangle. So you can see this is an uptrend, it's moving up, again some consolidation, but if you can see this, it's kind of same, it's moving in a line, if you can see, and then it has dropped. Okay, so this is your ascending triangle. Next, moving ahead, we have your let's see, you will, so one more thing I would not, want to say is ascending triangle. Yes, I do understand it's not dropped completely, but if you can see, it has moved down and fallen really well here. Okay, next is very interesting one, that's double top and double bottom. If you can see, it is forming almost a similar high here, and then it is kind of moving down and up, right? You will find your double bottom the similar place. You can see here this is the low form, and then it's at almost a same level, right? Double bottom. So you can see two bottoms here, two tops here. You have your chart pattern here. Now you will place your trades and all. I will tell you in the upcoming lectures when we use the strategies and in the further lectures. Next we have the descending triangle. So see here, a very good example here, descending triangle. You can see a slight downtrend. It's moving in a consolidation zone, but it is decreasing, and then there's a sharp downtrend here. So notice here there is a tiny retracement that is given here. So you will place your trade here with 1:2 ratio, meaning to say that stop loss will be the low, and then you will put the target later on. So you can see 1:2. Even if you put, you would have easily received it here. Okay, so let's take a look at the next one. We have Okay, we have the symmetrical triangle here. If you can see the highs and lows, you have the descending highs, the ascending lows, the trend line, I mean, and you can see it is decreasing and then it has gone down. So you can see here, this is a downtrend wherein you have the symmetrical triangle. There is a slight uptrend for which we have the downtrend. So if you placed a trade here, purchased your 1:2, easily you would have received here 1:2, right? So again, these chart patterns will help you, get your profits, but I will, I'll probably help you more when you go ahead and understand a little about your trends and other strategies as well, right? So this was just to make you understand how these look on an actual graph, your entire chart here, right? So we have an inverted head and shoulder. If you can see, there is one left shoulder formed, right shoulder, and then there is a low. So if you can see, the head is formed after it has broken the left shoulder. There is a double top that is formed here, right? And then this is the inverted head and shoulder. So I don't think I have got a clear head and shoulder, but just to make you understand, yes, see here, this is not an exact head and shoulder, but you can understand this pattern here. So see, there is a high almost similar. You can see the right shoulder, the head has broken the high of the left shoulder and it has reached here, faced a rejection, come down. So if you can see, this is slight, not an exact, but just to make sure I show it to you, I have given you this image here. You will be able to find in different various other charts, but this was just an example. Moving next, we have the rising wedge. If you can see, the rising wedge, again, you can see in a downtrend, and then this is it has moved. You can see, and then it is going down. So it has seen a sharp fall. Where will you place your trade? Here you will be selling again. All right. Next, we have the bearish flag pattern. Again, in a downtrend, we are seeing, you can see it's a very flat and then it is going on to decrease. There is a slight. Now, one more thing, bearish flag, we do not buy, we only sell. Okay. But here, if you can see, it has broken, there's a breakout and it went in the uptrend. So we have not placed any trade here, right? So next, moving on, we have, oh, okay. I think this was all. I did not find a few, other chart patterns, but this was all that I found till now. Anyway, moving ahead, I'll keep talking about these chart patterns, different types of candlesticks, what it shows, what is the trend, and because of such chart patterns, what is the impact on the prices and the stock. So I hope you have got some information about the chart patterns. I would suggest you all to kind of go ahead and go to TradingView, find a few charts, which companies and stocks, and see if you can find such patterns. And in case you find such patterns, what is the result and what is the next thing that has erupted? Like, if you have seen an uptrend, is it like an uptrend or it has been a downtrend? Like in example, a bearish flag pattern, there was a downtrend. So if you find a bearish flag pattern, can you see a further downtrend there, right? And this is just to make you realize the difference, different aspects of your uptrend and downtrend, and how these candlesticks form and give you your profits and loss, right? So I hope you have enjoyed this video, and I will see you in the next one. Till then, goodbye and happy trading.